SEC is trying to ban crypto. Attention crypto enthusiasts. The SEC, under the leadership of Gary Gensler, wants to ban crypto. Yes, you heard it right. The rumors are true, and the crypto market is on edge. But how is the SEC trying to ban crypto? And why would they do that? In today's video, we dive deep into all this, the potential consequences, and the latest news surrounding the lawsuit against Ripple and some of the big crypto exchanges out there. Stay tuned as we uncover the truth behind the SEC's intentions. But before we get started, if you're new here, don't forget to hit that subscribe button and ring the bell to stay up to date with all the latest crypto news. Let's get started. And before we jump into the drama, let's take a quick look at why cryptocurrencies have become so popular in recent years. Cryptocurrencies, like Bitcoin and Ethereum, have revolutionized the financial world, promising decentralized transactions and financial freedom. However, this has also caught the attention of regulatory bodies like the SEC. The SEC's primary concern is investor protection, as they say. The rapid growth of the crypto market has led to some scams and hacks, but even banks that have been here for centuries can get hacked. And now, the SEC is taking steps to ban crypto. But to do that, it's not going to be easy. So they started doing it step by step, and we'll see all these steps in this video. First, they aim to regulate cryptocurrencies, bringing them under the existing security laws. This means that some cryptocurrencies might be classified as securities and subject to additional scrutiny and compliance. The first step is banning crypto staking. So let's start off with a tweet that caught our attention. Last month, Coinbase's CEO, Brian Armstrong, shared some concerns about the future of crypto staking for retail customers. According to rumors, the SEC might consider banning retail investors from participating in crypto staking. In his tweet, Armstrong expressed his hope that this wouldn't happen, as he believed it could be the wrong move for the US economy. Now, here's where it gets interesting. SEC Chairman Gary Gensler has previously discussed the possibility of classifying cryptocurrencies that allow staking as securities under the Howey test, which is a legal test used in the United States to determine whether a transaction qualifies as an investment contract. Yes, even though Ether has been recognized as a commodity by the Commodity Futures Trading Commission, or CFTC, Gensler raised concerns that staking might imply an investment for profit based on the efforts of others, which could fall under security regulations. But let's not jump to conclusions just yet. Alison Mangiero, the executive director of the Proof of Stake Alliance, or POSA, is opposing the idea that staking should be considered an unregistered security. According to Mangiero, staking is actually a way for anyone to contribute to the security of proof-of-stake networks, democratizing network consensus and validation. Plus, it enables anyone to participate, fostering domestic technological innovation. The second step is banning crypto exchanges. The SEC is currently looking into the possibility of suspending the activities of centralized crypto exchanges. Reports suggest that the agency is seriously considering making significant changes that could impact the entire crypto sector. One of the triggers for this investigation was the recent argument in the case against FTX and its CEO, Sam Bankman-Fried. The SEC is still apprehending more people linked to the exchange. It appears the SEC is taking a broader approach this time. They view the in-house tokens as securities, regardless of how they were made available to the public. Gary Gensler emphasized that FTT tokens are a security and have significant importance to FTX. This change in approach could have far-reaching consequences, potentially impacting not only the companies issuing such tokens, but also the exchanges providing access to these tokens to users. This means popular exchanges like Coinbase could come under scrutiny. A crypto-specialized lawyer mentioned that it seems that the SEC is shifting focus from going after token-issuing companies to targeting exchanges as intermediaries. On June 10, after months of discussions and warnings, the SEC took legal action against Binance, the world's largest crypto exchange. And guess what? The very next day, they also sued Coinbase, America's biggest crypto exchange. The SEC's actions were not entirely unexpected, given the signals they've been sending recently. What caught everyone by surprise was the SEC's decision to go after both exchanges at the same time, making a significant impact on the crypto markets. So, what exactly are the charges? Binance and its founder, Changpeng Zhao, are alleged to have violated securities laws by letting US customers trade on Binance.com despite the ban on US-based users. This, along with commingling billions of dollars, goes against regulations. On the other hand, Coinbase has been accused of participating in the securities market without proper registration and operating as an unregistered securities exchange, broker, and clearing agency. Interestingly, the SEC didn't mention Ethereum in its lawsuits against Binance and Coinbase. Why is that? It's likely because the CFTC has already classified Ethereum as a commodity, not a security. This classification might have influenced the SEC's approach in these cases. It just goes to show how complex and interconnected different regulatory bodies can be in the crypto world. Now, you might be wondering if all this legal action will affect traders and investors. In one word, no. Similar laws and settlements are common in the financial services and banking industries. Big banks like Bank of America, JP Morgan Chase, and others have faced hefty penalties for various issues totaling billions of dollars. So, while it's essential for the exchanges to address these allegations, it doesn't necessarily mean doom and gloom for crypto investors. Gary Gensler is saying that the US doesn't need cryptocurrency. In a recent CNBC interview, SEC Chairman Gary Gensler shared his thoughts on how crypto exchanges operate in the United States. He expressed serious concerns, claiming that the entire business model of the crypto industry is built on non-compliance. Gensler highlighted that crypto exchanges are commingling a number of functions, drawing an analogy of how such practices would not be acceptable in traditional finance. Imagine the New York Stock Exchange running a hedge fund. It wouldn't work. One of the key points Gensler made during the interview is that according to him, the United States doesn't need more digital currency. He argued that we already have digital currencies in the form of the US dollar, euro, and yen. These fiat currencies are digital and widely accepted as means of payment. The SEC has been ramping up its crackdown on the crypto industry since Gary Gensler took over as its chairman in 2021. Their actions have also targeted other US crypto exchanges, including Kraken and Bittrex, for allegedly selling unregistered securities. While the SEC's efforts are aimed at protecting investors and ensuring compliance, some lawmakers, primarily Republicans, are concerned that the increased regulations and lack of clarity may stifle innovation in the nation's economy. Representative Warren Davidson, RO, is among those who have expressed their disapproval of Gensler's approach, stating that he plans to introduce a proposition to have Gensler removed from his position. Gensler is disappointed in the latest XRP court ruling. Gary Gensler recently shared his thoughts on the Ripple court ruling and discussed the SEC's approach to regulating the crypto market. So let's dive right in and explore what he had to say. Last week, there was a significant ruling in the ongoing cases between the SEC and Ripple Labs. Judge Annalisa Torres stated that the programmatic sales of XRP to the public did not count as a sale of unregistered securities. Chairman Gensler expressed his disappointment with this decision, but revealed that the commission is considering the possibility of a legal appeal to challenge the ruling. However, there was a silver lining for Gensler, as the judge also acknowledged that institutional sales of XRP were indeed unregistered security sales. This highlights the complexity of the case and shows that it's an important topic for the SEC. Gensler addressed concerns from the public about the SEC's recent crackdown on the crypto market and its focus on enforcement actions rather than rulemaking. He also stated that the SEC's enforcement actions have been a consistent method of communication since 1960, especially concerning issues like insider trading. Gensler acknowledged the huge potential of both cryptocurrency and artificial intelligence technologies. However, he highlighted that the crypto market, in particular, requires more immediate regulatory oversight compared to the AI field. He explained that the SEC's focus is not to prejudge any particular company, but to bring those not in compliance with regulations into line. This includes companies developing cryptocurrencies and the exchanges facilitating their trading. And Congressman Rishi Torres is saying that Gensler is intent on sabotaging the crypto industry. He strongly criticized SEC Chairman Gary Gensler, accusing him of trying to sabotage the industry. At the Art Plus Tech Summit, Torres compared Gensler to an overzealous traffic cop who unfairly accuses drivers of speeding without informing them of the speed limit. He stated that the SEC's approach was based on regulation by enforcement. While the SEC claims that existing securities laws are suitable for cryptocurrencies and the registration process with the regulator is clear, Torres and others in the industry disagree, stating that there has been a lack of clear guidance. According to Torres, Washington's negative view of crypto is not purely ideological, but also generational, with many policymakers being part of a gerontocracy. He believes that opinions on emerging technology should not influence regulation, and that the primary role of policymakers should be to create a framework that protects customers and investors. Torres emphasized that the government and regulators should foster an environment where entrepreneurs can innovate freely without facing arbitrary government actions. He also highlighted the impact of enforcement actions on legitimate businesses, asking for a more supportive approach to blockchain technology. As the crypto community brims with uncertainty due to the SEC's actions, it's crucial to remember that these events are part of the ongoing evolution of the industry. While the SEC's investigations and legal actions against cryptocurrencies and exchanges have certainly caused turbulence in the market, it's essential to keep a broader perspective. Regulatory challenges are not unique to cryptocurrencies. They are a part of any developing industry. As we move forward, we will closely monitor the developments in the SEC's actions against crypto and the potential implications for the broader crypto market. Don't forget to hit that like button and subscribe to our channel for more exciting news from the world of cryptocurrencies.